What's up? What's up? I'm here, stock market coach and option trader Jason Brown, and we are live. And we're getting ready to open up the fan line. We just started the live stream. We're going to open up the fan line. So here's how it works. You'll see a number at the bottom of the screen, and obviously, if you're joining us live, you'll be able to call in, and then we're going to bring you onto the show live. So when you call in, depending on how many people are in the queue, you're just gonna stay there on hold. And then once we bring you on, your phone will typically ring. It'll be us, and we'll bring you live on the show so that you can answer your questions. We're live streaming it, and we're having some fun today. And we're talking about the stock market. So let's get into it as far as opening up the fan line so that we can get there. So boom, it's notifying subscribers and boom, the fan line is open, and we're just going to let that be open as you guys start to pour in. And we did this before, which was really kind of cool to be able to sit here, talk to you about the stock market, take your questions, your comments live, because a lot of people have questions about the stock market, and sometimes it's hard to get those questions out in the typed form or the written format. And so when you bring it and you're able to speak into life what your question is, speak what's going on, what you're looking at, what you're thinking about with respect to the stock market, it comes across a whole lot easier. So that's what we're going to be doing. We're going to be allowing you to bring your questions on live. And it also doesn't necessarily have to be about the stock market. It could be about money, business, getting started. It could be about taking risks, overcoming the fear of taking risks, which is one of the big things that a lot of people have to overcome. It's like, I'm scared of losing money. I'm scared if I make the wrong decision or whatever the case may be. So, fan lines is open. We want to talk about it all today for as many of you that are willing to call in. So don't be shy. There's the number on the screen. 251-302-0789. That puts you into the live show, and we can take your questions live and talk about whatever's on your mind, whatever's going on with respect to the stock market or whatever you're thinking about. Uh, so let's do it. Who's going to be first to call the line and bring your question in? I'm going to take a sip while you guys get prepared. Just hit the phone and let's go. Jerry Coiner says, I love when you go live. Thanks, coach. Let's do it. Welcome to the party, Jerry. And the line is open. So if you want to call in, 251-302-0789, feel free to call in. Kalasa Gakko, I hope I'm saying that right, tuning in from Canada. Osaji says, can you talk about how to take advantage of put options? So, Asagi, if you could call in on the line and just share with us, what do you mean by how can we take advantage of put options? That's a pretty vague question. But what this portion is for. It's for you to be able to call in, ask your question, and for us to be able to answer it live right here on the show. So feel free to call in and ask that question. Larry Bird, same thing. What option strategies do you recommend in such an unpredictable, I think that says unpredictable market? Doug Tolliver, welcome to the party. So again, guys, the way this works, the fan line is open. Just dial it, and maybe we should call it just to make sure it's working. So let me make sure, Antonio, call the line. Let's make sure everything is working. Let me see if I see your name or a caller pop up at the bottom. So I'm gonna double check, make sure I'm not saying call in and the line's not working. Should be. Should be. Just probably nobody called in yet. So Antonio is calling. And he's going to give me that signal. Oh, yeah, I see you down there at the bottom. All right, you can hang up. So, yeah, the lines are open. There it is. We got our first caller. Now that Antonio hung up, let's bring him on. There it is. You're live. You're hot with us. Welcome to the call. Who do we have?
Yeah, I just this is Osagi here about the call the put option question.
Oh, Sagi, welcome to the call. First caller. What's going on, man?
Man, life, man, everything is amazing, man.
Good to
Getting
hear.
better every day.
All right, so what's your question? Shoot, bang bang. Let's get into it.
Yeah, so I do I watch your videos often, man. Trust me, man. I'm gonna buy that $99 package, the $999 package. I promise. And then I got a question about that too. But my question is about the put options. So I do call options, right?
Mm-hmm.
And I understand the strategic of how that works. Basically, and this goes aligned to my question. Basically, you buy an option on a product that you think that is going to hit this certain number at this particular time.
Mm-hmm.
So, one thing that you do bring up is very smart as far as I do understand how calls work, but then I'm kind of struggling with understanding how puts work. So my question to you is that just like I explained how calls basically you want a certain time frame and that certain time frame you want it to hit a certain number. So is it the opposite as far as when you do put options?
Yeah, so let's break down what a call option is and what a put option is. A call is giving you the right to buy a stock at a certain price for a certain period of time. And so you want that stock to go up eventually, right? So if you buy a if you pay $5 for the right to buy, let's just say some XYZ stock at $70. Well, you need that stock. If it costs you $5 and you have the right to buy it for $70, basically by the time it expires, you need that stock to at least be at $75 just to break even and then higher to make money. And so when you're buying that call option, you want the stock to go up, but not just up past the amount you paid for the option. Well, when you look at a put option, it's a little bit different. Instead of saying you have the right to buy the stock, you're saying you have the right to put the stock to someone else. You have the right to force them to buy the stock. Now, don't worry about if you own the stock or not to even make them buy. That's irrelevant because you have the
Okay.
right to make them buy some stock, somebody's stock, anybody's stock. And so with a put option, you reverse it. So if you were buying a $5 70 strike price put option, you would want the stock to
Mm,
fall at least to 65. So you see, when you were buying a call
gotcha.
option, you wanted the stock to at least go up to 75 to break even and then go higher to make
Gotcha.
money. When you're buying a put option,
Gotcha.
you want the stock to fall $5 minimum just to break even. And then anything below that, you make money. So you make money from the stock falling. You need it to fall a certain amount before expiration. Does that make sense?
It makes perfect sense. It makes perfect sense. So then, if you don't mind, I just got one more question. So, if you say, for instance, you bought a stock for like whatever, it doesn't matter, and you got 100 shares, right?
Mm-hmm.
And you want to actually enter the game and put that 100 shares in the market to be either a call or put. Now, my question to you, I mean, I'm trying to figure that out. How would you in layman's terms break that down? How would I go about putting 100 shares that I bought into the market to be a call or put? How would I go about that?
Well, if you own 100 shares, you got to ask yourself, what are you trying to do? Do you want to sell options
I want to
against the
kind of like,
shares you own, or are you trying to protect the
yeah,
amount of money you have in there? Because that's going to determine which one you're doing.
okay. I'm looking at it like, okay, like say for instance, I just gotta throw this out there, right? Like you shooting dice, playing craps, right? You got the side bet, right? So I own stocks, I own options out there, but then I have another 100 shares that I'm just like, okay, I want to use it as a side bet. Would I be able to do it that way, or that's not what it's for?
Um, sort of. It could. No, I get. I think
Okay,
I'm because I'm trying to put it in like when I'm shooting dice. Like, what's the side bet? It's like I got my number that I have to hit, and then I take
right,
a 6-8 or a
and
10 to
then
4 on the side. It's sort of like that.
exactly.
So if you own some stock at $70. We'll stick with the $70 example. You just
Right.
own stock. You need it to go up to make money. Technically,
Correct.
your quote unquote side bet would be I'm going to sell someone a 75 or an 80 strike price option. And so if you sell
Got
that
you.
75 or 80 strike price option, you might only get $1 or $2 for it. But if it goes up to 75, assuming you sold a 75 option, you're going to get to keep that $1 or $2. And then they're going to say,
Got
hey,
it.
you got to give me the stock at 75. You're going to say, no problem. I own it at 70. But where it becomes a quote unquote side bet, if you will, is if it
Right.
doesn't make it to 75, you still get to keep that $2. So you would
Fair.
technically make that
Okay.
quote unquote side money.
Yes.
Yeah. So that's
Got it.
how it would work.
Perfect. That makes perfect sense. I couldn't get that part, but you broke it down to where now I understand my point of why I was thinking of doing it that way. Okay, I got it. So, and my last question is, 'cause I know you got a bunch of callers. So when I do get that, I think it's the 9.99 package that you got, and it's the one that you said it's a lifetime deal. But the reason why I want to get that particular package is that I get to work. I think you mentioned that I get to work hands on with you and your group and your crew. I guess you guys go live every day or something like that. Is that correct, or am
Yeah,
I
so
misunderstanding that?
for anyone listening, they can go to powertradesuniversity.com and take a look at the packages. But right now, or at least for a very limited time, because those prices will be changed or they may have changed, but it's 1,000 to join and 199 a month, or you could pay annual. You get access to all the courses. You get access to our live group coaching session that we do every week live for 2 hours on Monday. We also live
Okay.
stream in the group from time to time. And then you get access to the traders forum where you can chat with all the other traders inside the community, post your trades, post your stocks. You get to see what we're buying, what we're looking at. You get access to the
Okay.
trade tracker and a whole lot more.
Okay. 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 And
Yep.
that's is that. Go ahead. I'm sorry.
No, I was just saying, and that's the these are the little tweaks that we help you iron out of like, why would I do
Right.
that strategy? What's the pros and cons of doing that strategy? When's the best time to even do that strategy? Because even though you might know it, but do you know when the best time to even try it or go for it is? So there's all those
Gotcha.
things that's what we help iron out. And what's beautiful is we help you iron it out in the real market, meaning like you have a place to ask your questions real time. Like I'm looking at this stock. I'm thinking about doing this spread. What do you guys think in the community, or you can ask it live on the Monday night sessions?
Gotcha. Gotcha. Are you open to teach like candlesticks, like the purpose of why they look the way they do and things of that
I'm not
nature?
open to it. We've already taught it. We got a whole course on candlesticks in there.
Okay, cool. Okay, cool. Any companies
Candlesticks,
that pass?
options, calls, puts, advanced
Gotcha.
spreads. We've already taught it. It's all in there.
Got it. Cool. Sounds
What
like a
chart
plan, man.
settings are the best? All that. It's all in there.
Cool. That's all. That's the only questions that I have, man. And I do want to say, man, I appreciate it, man, for giving me your time and also the time that you put in effort you put in for people to understand the market, man. I appreciate it.
For sure, man. Thank you. That's why I do it so that people can understand it and feel better about their investments and not be gambling, right? Because now once you know what you're doing on purpose, it's not gambling, right? It's a calculated risk. And that's what you want to take,
Exactly.
calculated risk, not gamble.
100%.
So
100%. All
awesome,
right, man. I
man. Well,
appreciate
thanks
it.
for calling
Yes,
in.
sir.
All right,
Oh,
bye.
no problem, man. Thank you. Yeah.
All right, that was cool. That was some good stuff. All right, let's go straight into the next call. Looks like we're ready. Boom. Hey, what's up? It's Jason Brown here. You're hot. You're live on the channel. Who do we have the pleasure of speaking with?
What's going on, Jason? It's Jabari out in Charleston, South Carolina. I'll go with it.
Jabbar. What's going on, sir?
What's going on? I am a PTU member. I saw the live. Just want to call in.
Nice, nice. So you're already part of the regular program. You're like, and I get to call in and be on the YouTube channel live.
Yeah, yeah. Just had a question for you, Coach.
Yeah,
Just say
what's
you got
up?
just say you got 100K in the account, right? and then you're not really trying to grow it like 80%, 100%, like with straight calls. I know when it comes to the conservative strategies, like naked puts, cash secure puts, covered calls, just to
Hmm.
get that passive income. What strategy would you use, or would it be a combination? So if you're just trying to get in that 5K a month, boom, you try and put the whole 100K to work just to get 10% of that.
I
And
mean,
it's
you
like, hey, I
just
don't have to. Yep.
Yeah, you actually said it. If I had 100K and I wanted to be conservative and pretty safe with it, I would be doing
Hmm.
either cash secured puts or I would be buying the stock and selling out of the money call options against it. Pretty safe. You're not worried about time expiration. You let the time expiration expire on someone else. That's why you're either selling the put or you're selling the call against the stock that you already own. The thing is, you just want to make sure you're doing it on a good company or a company that at least is holding at its current price or going higher if you're going to own the stock because you don't want to collect $5,000 yet the stock is falling and you're down $30,000 on the stock, right? So it's like
Hmm.
the $5,000. I call that my rental income strategy. I want to make sure the property value stays about the same so I can collect rent every single month. So that's the key. You want to do it on a stock that's stable or going higher, not on the stock that's like declining. Because some people be like, well, I don't care that the stock is falling. I'm getting this amount of money in rent. But it's like, yeah, you made 5,000 in rent, but the property value decreased $10,000, or in our case, the stock value. So you're still negative $5,000. So that's what I would do safely, conservatively, be able to sleep at night, not worry about my entire account getting blown up. It's actually one of the strategies we work with a lot of the elite members on, but I mean, we teach it inside the Options Explained course, but that's one of the ones we really walk people through in elite. A lot of people like that strategy because when you got 100 grand or more, you don't necessarily need to be super greedy, or should I say super risky, because it's less about making a ton of money. It's more about making a little bit of money, but protecting the 100,000 that you work so hard to get.
Hmm. Hmm.
So yeah, that's one of my
Last.
favorite strategies. Then you start thinking about what happens when you get $1 million in your account and you can do a naked put on some company and really take in 10 times the amount you can take in with 100,000 and may not even ever have to buy the stock. It's a super sweet strategy.
Feel you. Feel you, man. One last thing. What's your thoughts on scared money doesn't make money?
Um, to me, scared money doesn't make money. At least where I'm from in my neighborhood, that was more of like a tactic of kind of punking you into taking action. I believe scared money doesn't make money, but I think we have to take it a step further. And in the stock market, we'd have to take a step further and say, well, why are you scared to take that shot? If you looked at the chart, you determined if it's at support or resistance, you determined your risk reward ratio, you've also determined your I'm wrong level, where you're going to get out of the trade if you're wrong. Then I would ask, why are you scared to take that shot or take that calculated risk? The only reason you're typically scared to take that calculated risk is you haven't done all the things that I talked about. You haven't looked at the chart. You don't necessarily know why you're buying it. You don't know why this is a good price for the stock. You don't know what industry or business that they're in. And that in itself is a problem, which will make you scared, which will make you delay on taking action. But if you've done all that research, you shouldn't be scared. If you're still scared, um, it also might be because you're buying too big of a position, and if that goes against you, that would hurt you and your family financially. If you're still scared, it might be that you mortgage your house to take that trade when you shouldn't have, and if the trade goes against you, you're going to lose where you live. So it's more about understanding why are you scared than saying some saying or fancy quote to try to make you feel bad about yourself to just buy something, right? Like if a person doesn't understand Bitcoin, I don't like when people are scared money don't make money. It's like, no, no, no. It's not scared money don't make money. They don't understand what they're doing. So rightfully so, they should be scared. But if you actually understand all the risk in what you're doing, I would ask, well, yeah, scared money doesn't, like, what are you scared of now? I like to say confused money don't make money. I like to say, ignorant money doesn't make money because that is what causes the fear. Does that make sense?
Oh yeah, gotcha,
So
gotcha,
that's how I think about it.
gotcha, man. Hey, no, one quick technical question. What if I
Sure.
do a credit spread, right? So say I get like 80 cents credit, right? Stock goes whatever direction, and now I can, get it back for half. I just need to do the opposite, correct? So if I do a spread and I get 80 cents, if I want to close it out earlier, I need to do a debit, correct? So I find
But
myself
see,
just doing market and getting
just to
like whatever.
just to keep it simple, you always do the opposite of what you did to get into it. So if you did a spread, that means you bought two options. You bought a call option and you sold a call option, or you bought a put option and you sold a put option. Um,
Hmm.
so let's just stick with call options. You bought a call option and you sold one. Well, if you want to get out, you have to buy back the one you sold and then you have to sell the one you bought. So you do the exact opposite of what you did to get into it.
Gotcha. And if I got the 80 cents credit and I just want to catch, hey, I'm cool with just getting 20 back. I just do the opposite and put in a limit debit for the remaining 60, right? And keep the 20.
Technically, well, it depends on how your platform works, right? So like um a debit would mean like it's typically preferred to when you're entering the trade, depending on how you enter, it depends on how you enter the trade. So if you let me give you an example. If you buy a call option for $2 and you
Hmm.
sell an option for $1, that is a dollar debit, right? Because you put up two, but you brought back in. I shouldn't use that because those numbers, I'm using two and $1. Let's do it like this. Let's say you bought an option for $5 and you sold an option for $2. That would be a net debit of $3. $3 went out of your account. When you're trying to close it back out, you're
Hmm.
gonna buy the one back you're sold, and then you're gonna sell the one you're own. You're gonna say, "Give me a credit. This is how much money I want coming back to me." Because when you first entered it, it was a debit. So remember, what you did to get into it, you do the opposite
Hmm.
to get out. So you would buy back the one you sold, sell the one you own. If you did that in one transaction, that would technically be a credit because it's the opposite of what you did to get into it. Getting into it was a debit. Getting
Mm.
out of it, it should be a credit. Credit my account $2 or whatever the ratio is once it's gone down or
Gotcha.
went up or whatever. So it all depends because if you
Gotcha.
did a credit to get in, then you're going to do a
Hmm.
debit to get out. So it all depends on how you entered the trade.
Gotcha. Gotcha. Perfect. That's what I needed. That's what I needed. Hey, thanks, Coach, man. Love the program. Looking forward to all the. I know you got stuff up your sleeve. Just looking forward to it.
Oh yeah, we always got some good stuff cooking. So awesome, man. Well, thanks for calling in.
All right.
Awesome. Bye. All right, the fan line is open. If you got stock market questions, options questions, questions about trading or investing in general, I want to hear from you. Call in. Don't just be a fly on the wall. Pick up the phone. I know you get a lunch break or something, and literally call in. Let's ask your question. That's the whole point of this. Is for us to bring you on live, hear your voice, hear the question, so we can really understand um, what it is that you're having trouble with, you're confused with, or just want a little bit of clarity on. And that's why I love doing this, whether it's, here live on YouTube or in our group with our members. When we do our Zoom or our GoToWebinar meetings, we love bringing the members onto the call because you can really get a feel for what they're trying to figure out, where they're stuck at, where, what they're getting confused on in the trade or the investment. And that's what this is all about. And if you can get unstuck, if you can get unconfused, then you can get on to the other side of this thing where you can start to actually make some money. All right. So, Emily, welcome to the party. Joseph, welcome to the party. Again, feel free, call in the fan line. It's open. Come on the show live. Emily asks, does anyone know anything about Dogecoin? So we actually got a whole series that we're working on about cryptocurrency, actually, that's going to be coming out. Um, I don't want to say soon. I guess I could say soon, but what is soon? Soon to me might not be soon to you, but very shortly, I guess that's a subjective term. Very shortly, we're going to be releasing a few videos or a series about cryptocurrency. So stay tuned. We can talk about Dogecoin, altcoins, Bitcoins, all the coins, Litecoin. Those will be coming here soon. D Felder says, what if we don't know anything, like where to start? Then call in. Talk to me about where you're at, and let's give you a couple of tips that you can use to start investing in the stock market. With all the knowledge that we put out on YouTube, with our starter packs that we have on our website, we have so many good places for people to start. And so, in 2020, there's really no reason to be a confused beginner in the stock market. So Leslie Montenegro, I hope I'm saying that right, says, "Hi, where would I start to learn trading? What to learn first?" Um, well, since two of you asked basically the same question, let's just talk about it. All right. First thing, at least this is how I like to think of it. The first thing you want to know is, why are you even doing this? Why do you want to learn how to trade? A lot of people just say, I just want to trade. I want to get in the market. I want to trade. It's like, well, why? Why are you doing this? Because knowing why you're doing this, how much money you need to make, is also going to determine what type of trades that you need to take, or type of investments, or whatever your style is going to be. Once you kind of have at least some idea of why you even want to do this, I believe there's about three things that you really should learn that I teach in my program. Number one, you need to understand like fundamentals. So, how do stocks work? What's the language? What makes them go up? What makes them go down? Number two, you need to learn how to read charts and technical analysis, determine the best time to buy and sell. And then number three, you need to learn options to determine how to either supercharge your account or how to protect it from a major sell off. Those are kind of the three pillars and building blocks of learning that we recommend going through and that we teach inside of our university. And we also have some free content that'll help you kind of go down that path as well. We got another caller. Let's take this call. All right, you're live. Who do we have the pleasure of speaking with?
Hey, good afternoon. This is Shannon G. How you doing there, sir?
Shannon G, what's going on?
Man, thank you so much for what you do. Thank you a whole lot. This is very appreciative, very appreciative. The question I have is, what are your thoughts on long-term put options? And I guess a part two perhaps maybe what would be the longest you would go out for a put option?
Yeah, great question. So, my thoughts on long term put options, you have to really break down what are you buying a long term put on, because to be long term with a put means you believe that over time something is going to keep declining or falling. So let me give you an example. I used to work for the cell phone companies, right? When I worked for the cell phone companies, I saw the iPhone when it came out and it was eating all the other carriers' lunch. Well, there was a company called BlackBerry, and we used to sell a lot of Blackberries. Well, BlackBerry didn't want to change. They didn't want to put cameras in their phone. They're like, we're the corporate phone. They don't have cameras in the factories and stuff like that, but they got their BlackBerry. They can get email. And then I saw iPhone come out, put the cameras in there, release the App Store, and BlackBerry was like, well, they'll never do email as good as us. So we don't care about the camera, this, that, and the third. And you know what I said? I said once, because Apple had like a 10-minute delay on their email, or 15-minute delay or something like that. I said, once Apple figures out how to push email instantly, the same way that BlackBerry did on the BlackBerry server, I was like, it's over for BlackBerry. Trust me, Apple figured out
Yes,
how to
sir.
push corporate email. I was actually buying long-term puts on BlackBerry. I'm like, it's over for them. All right. So if you have a trend and a reason why you believe long-term it's ending, it's over, then I would go long-term puts. However, studies and statistics have shown that the market always goes up given enough time. You can go back as far as you want. The market always goes up given enough time, be it through 9/11, planes flying into a building, being through Trump and China trade war, being through a pandemic now. The market long term goes up. So I wouldn't be short the market, or I wouldn't be looking to be puts against the overall market. But if there's an individual stock that you believe long term it's overformed, the product isn't good anymore, it's outdated, you don't believe that the leadership can revive itself because they're too busy thinking that no one can take them out, then yeah, I would potentially short that company. Now, typically, the second question, I typically like puts for 30 days or less. I think anything can
Okay.
fall for about 2 weeks, 3 weeks, 4 weeks. But long term, I'm more of a believer that companies typically figure things out. And so I don't necessarily do long term puts, typically 30 days or less.
That's very, very helpful. Thank you a whole lot. Thank you so, so much.
Yeah, you're welcome. You're welcome. Anything else before we let you go?
No, sir. No, you answered it. You did. Yeah, thank you so much. I definitely appreciate it, and I will start to employ that in my strategy. Thank you so much.
All right, awesome. And thanks for calling in. All right, we got that next caller. That's what I'm talking about. Rapid fire, back to back to back to back. Let's go. All right, you're hot. You're live on the show. Who do we have the pleasure of speaking with?
Jason, how you doing? This is David.
David, I'm fantastic, man. It's Friday. We're live on YouTube. We're taking calls. I'm having the ball, man. How are you?
All is great. Thanks for all you do. I want to say thank you for you've answered my questions a couple of times on different platforms. So I keep reaching out to you, and I look to join your options course and power trades one day. So while I have
We'll
you
be
live,
here. We'll be here.
yeah, you have been. So thank you. All right. So first thing I want to ask about is seasonal trades because I heard about, or actually I read about certain industries like the cruise lines, the airlines, uh, amusement parks. You know, these are things that are coming up within the summertime, and they said these like now going into options. You want to look at purchasing for like the June and July time period because with those things opening up, we should have some better opportunities for the options contracts, especially the call option contracts. Do you feel that is true, or that's just talk?
Okay, so here's the thing that I think most people don't pay attention to that they need to pay attention to is keep in mind that the market is forward thinking. Okay, so
Yes.
let me give you an example. And this is one, and I think a lot of people resonate with this. This is a problem that most people have. People will say, the new iPhone just came out today. Should I buy some stock? I know Apple go kill it. Well, the market
Hmm.
is forward thinking. So 6 months ago, people were buying Apple stock in anticipation of the new iPhone coming out. So what happens is the opposite of what people think is going to happen. Then they're like, I bought some stock. Why is the company dropping? And it's because
Okay.
people have been buying the stock 6 months ago in anticipation of a new iPhone. And when it finally comes out, they're ready to take profit because that's old news. And now the new news is going to be how many did they actually sell, right? And so they don't want to wait for that risk of finding out how many did they actually sell. They were buying in the anticipation that there would be a new iPhone coming out and that ideally they would sell enough anyway. And so the market is forward thinking. You have to start to look to what's going to happen after that because most news that you as an individual have is already priced into the stock. They already priced in a 5G iPhone, an iPhone 12, or whatever we're on right now. Okay, what does that have to do with your question? Cruise lines, cyclical stocks, etc. It's no different. People be like, Target is back to school. Should I buy Target stock? Let me give you a little secret. Back to school has been the same season every year for the last 30 years. So everybody know that that cycle and season is coming. So that is not a reason per se to go jump or dive in to buy target stock because that's already baked into the stock that they have a back to school season every year. It's normal. So it's a non event at a certain point. What you're looking for is the events that's not baked into the stock that will now start to add additional revenue. So when Target pops up and says, we're going to start adding groceries, you're like, whoa, that's new information. That's a whole new
Okay.
revenue stream that they never had. They used to sell toys, notepads, cards, clothes, but they never had groceries. Now they can start to pull from Myers, Kroger's, any of the major grocery store chains and pull in additional revenue. So you knowing that something happens every year, every 6 months is not necessarily an advantage. It's like you starting to say, like, I'm going to invest in pool companies because the summer's coming up. Well, the summer comes every year around the same time, and they do about the same numbers. So that's already baked into their annual revenues that, oh, they're going to do good in the summer, they're going to do bad in winter. That's already baked in. It's not until the pool company says we're also going to start doing snow plowing and we're going to get into solar panel installation that you're like, ooh, that's a whole new revenue stream. Now we have a new reason to invest. So I want you thinking about it like that, not necessarily the stuff that's going to happen anyway that everybody already knows is coming. Any smart investor knows that that's already priced into the price of the stock.
Okay. All right. All right. Thanks for that. All right. One last question. So I purchased a contract yesterday. I did a call option on Snap, and I noticed that Snap had a rise, and then it took a fall today. And
I'm
I
looking
went
at
ahead.
Snap's chart. It didn't really take a fall today.
Well, it did earlier. It dropped down. The fall was
I'm gonna see if I can
you know,
turn my
kind of,
screen around for the people watching our live stream. I have Snap pulled up, and let me see. Let me pull up my drawing tool. You can see Snapchat. I'm gonna put my phone up to it. This was yesterday. No, I'm sorry. Today is what? Friday. This was
yeah,
Thursday, Wednesday. I'm sorry.
Thursday.
This is
No, no,
Thursday,
yesterday was
and
yeah.
this is
So I
Friday.
did
So
it.
that's not a fall. That's like a doji today.
It's a what?
It's a doji. It's like a nothing day. It's kind of open and then it closed right at the same spot, but it hasn't fell. You can see it definitely hasn't fallen below yesterday's candlestick. So I just wanted to show that to you because it's so important that we make sure we're saying the right thing. Like, well, it failed today. It's like, well, not according to the chart. But okay, go ahead, go ahead. I mean, I want to help you. I just want to make sure you're reading the chart right, though, which is a big portion
Well,
of.
unfortunately, I can't read the stock at the same time while I'm on the phone with you. I'm
Mm,
in the vehicle. So, but I mean, I did notice that it didn't. It reached the resistance line, like got real close to it. Of I want to say it was like 57.10, and then it started coming down, and it just kept going lower. It dropped down to 57 actually, and so I went to sell it, but I haven't gotten the contract. Um, no one filled it as of right now, so I'm just questioning if it doesn't fill the opportunity for it to roll over. It will do so, and the stock might go back up and present the opportunity to make some gains on it.
so I'm going to turn my phone around. I know you can't see this, but make sure you watch the replay. But I'm going to turn it around for everybody who's able to watch it. I don't think it's at resistance though, because I'm going to draw some lines on my chart and show everybody what I'm looking at. Support is literally, if I were to draw a line right here and take it across, I know you can't see it, but I'll read out the numbers. Support is right here at like 49 or 50 bucks, and then resistance, I'm going to draw a line up here. And again, if you're watching this on live stream, it's not the biggest, but I'm trying to turn my phone around so you can see it. There's resistance right there. Resistance is up near 64. So the stock's at 57 right now. So it still has a good 7 points to go before it hits resistance. You can totally see it's in the channeling stock. Boom, boom, boom. Now, again, I know you're driving, watch the replay, but it still has room to go. So I wouldn't be totally concerned just yet. The other thing is if you really want to get out, you just set a market order and you just say, I'm going to take whatever the price is right now. So you can always get out. You just say, I want to take whatever the best price is right now on the market. Get me out if you just really wanted to get out.
Okay.
But I think the stock has potentially a little ways to go up more. I mean, we'll see if that actually happens. I don't know. I don't have a crystal ball, but I wouldn't
Right.
panic right now. It's not down. It actually had 2 good days. Like day before today was good. Wednesday and Thursday was good.
And my call is not, I mean, it's expiring June 18th. So I did a $65 call for June 18th. So I felt, that I had good timing as far as the room for growth, and with the news that came out with Snap and their new opticals that they purchased into, and all the other things that they recently bought into. So I was like, okay, it looks good, but just the small drops today had me concerned. But again, me selling to close, no one has purchased it yet.
Well, yeah, that's because depends on what the price is. We can pull up the price right now. How much did you sell to close it for?
It was like $94.
Well,
I bought it at 80,
what's the strike price though?
65.
Okay, so
I
here,
was
let me
told I
pull it
could buy
up.
the
I'm gonna
yeah, I was
turn my
told I
phone
could buy
around so
the
everybody
price
can see. We're gonna pull it up. We got Snap that expires when?
June 18th.
June 18th. All right, let's do it. Snap. You own the 65 car. I think that's a problem, but we'll talk about why in a second. So the 65 car right now is going for 95 cents on my screen. So if you got it
Mm,
offered for 90 cents or 95, you should get filled like right now.
yeah, I haven't gotten filled. I tried it twice. Once at 94 and once at 93, and neither got filled.
Now you got to go
So
down
I
to 90. If you go down to 90, an even number, it'll get filled. No doubt, it'll
well,
get filled.
honestly, if you believe it has room to run, I don't want it to get filled, so that would be a perfect thing for me. But at the same
So
time, it was just that fear, of losing because the percentage was going down. I'm like, oh, great, here we go again.
now here's the problem though. Here's the problem though with the option you have. Resistance on this stock is at 64, and you
Okay,
have a 65 strike price option. So
right.
you're going to be in a losing situation. If this goes up to 64, then turns right back around and comes back down. So just based off what I'm seeing, you're in the wrong option to even be in anyway,
Correct. Okay.
because
Okay.
64 is resistance and you got a 65 strike price option. So you better hope it gets closer to that so you can try to get out. But if it gets to that and then turns around, the option is going to expire worthless if it's below 65. So really, I would be a seller of the 65, not a buyer of the 65, because that's right where resistance is at. So
Okay.
I wouldn't
You gave.
hold that too much longer and just trying to hope it goes higher. I mean, if you get another good day, I would close it today. Now, this is me. I'm not giving you advice. I would either
No,
close it
no.
today or I would wait till Monday. If it get another little move, I'd get out
Right.
because now you're going to lose Friday. You're going to lose Saturday and Sunday of time. So you're going to open up Monday
Yeah.
and lose 2 days worth of time, and it's already an out of the money
Mhm.
option. So
Mhm. Okay.
I think you got the wrong option to own because you own the one that's right at resistance.
Okay. Okay.
So if you're hoping it
Well,
goes past 65, could it? Sure. What does the chart say? It says it turns around at 64. That's not a
well,
bet I would be willing to take.
I know you've said there's no hoping and praying in the stock market, so I'm just going to take a look at it and review and just see what happens before the close of day today.
Just charts and technical analysis.
Yes, sir. Yes, sir. All right. Well, I thank you for your time, and I look forward to PTU in due time. and all the best and continued success.
Yes, same to you. Thanks for calling in.
All right. Bye bye.
All right, bye. That was a good learning moment, I think, for a lot of people, right? Because if you're reading the chart, you can clearly see where support is at. You also can clearly see that the stock didn't sell off, but for whatever reason, he felt like it sold off. But looking at the chart, it didn't. It's just kind of holding right there. And then to know that he bought an out of the money option, and that out of the money option is right at resistance where the stock turns around. That might not have been um, the best option. All right. Um, let's take this call. We'll take one last call and then we'll get ready to wrap it up. Boom, boom. You're live. You're hot. Jason Brown here. Who do you have the pleasure of speaking with?
Hey, how you doing, Jason? My name is Andre.
Andre, what's happening, sir?
What's happening? Quick question. I'm kind of brand new into stocks. I'm just an investor right now. A quick question. What should I do if the RSI is stuck on 50?
So let me ask you a question. What are you using RSI to measure? That's the real question. What do you use RSI for in your technical analysis?
Just try to get a stock at a low price.
Well,
You
RSI
use
doesn't
it.
tell you if it's at a low price because for those who listening, RSI stands for Relative Strength Index, right?
Yeah,
So
I know.
so so
What you
what are
saying?
you even using it for? Like, why does it matter that it's stuck at 50? 'Cause the reason I'm asking that, I want to make sure you're even using RSI even correctly.
Well, I heard that if it go down to like around 30, that the stock is being oversold, and if it's going to 70, it's being overbought. So, and then it was saying that if it hits around 30, that the trend is starting to go is going to start going down, and that'd be the best time to buy.
Yeah,
I
so
could be
R-
wrong.
RSI, the Relative Strength Index, it actually charts the relative strength of the market or a specific index over time. So it has nothing to do with actually an individual stock, unless you, I guess, applied RSI to that one stock and you're trying to see what the relative strength of that stock is over time. But the reason that relative strength index, at least in my opinion, is not a good user of determining whether it's going to go down or not. Some news could come out today, and who cares if the relative strength index has been high if an airplane crashes again? The relative strength index or it doesn't matter if the relative strength index has been high for like a Boeing. If the plane crashes again and they have another issue, the stock's going to tank. I don't care what the RSI says, right? So for me,
Hmm.
I don't personally use RSI as one of my main indicators. It has its place, but it's just I don't use it as one of my main indicators because I think for the reasons I just mentioned, there could be some faults with it. Or if a company has blowout earnings, right, then the relative strength index could potentially be high because of that one time event. And so those are anomalies in the chart that really could give you a false signal with that technical indicator. So I don't use RSI like that. I really wouldn't care if it's stuck at 50 or not. I would say it's earnings coming up. What's the pattern of the stock? And is it channeling? Is it uptrending? Is it downtrending? You rarely ever want to just buy a stock or sell a stock or a stock or an option based off like I just heard people say use this if it hits this number, it's good. If it hits this number, it's bad. Like if you don't fully understand what that is measuring and then what could be the faults with what that indicator is measuring, you literally could just be buying something and basically saying, give me 50 on black. Give me 50 on red. I mean you're paying, you're gambling. So I technically wouldn't use a relative strength index. Do you have a particular stock that you're looking at? I can pull up the chart and see what I see. Like, give me an example.
Uh,
What's
UPS.
okay? So let's look at UPS. Um, I should add relative strength to this chart, but I'd have to figure out where it's at. So UPS has been super strong lately, right? Let me turn my camera around. You can see UPS had this huge here had this huge run up, right? And now it's kind of stuck up here. And so the relative strength index is probably going to show this has been real strong. Like, sure, sounds good. But I wouldn't buy UPS after this big breakout because look what happened last time it had a big breakout. If you can see my camera, stock broke out. But what did it do after that? It went sideways for the longest time, right? And so now we finally got another big breakout. I don't know if this is just going to hang sideways and do nothing for a long period of time. So my money's going to be tied up in the stock that may not even be getting ready to move for a long time. And I definitely wouldn't buy any options because you're going to lose money on the time premium. So unless you're going to buy the stock and sell options against it or do a naked put or a covered put, I should say, I would
Oh,
stay away from it. But it depends on your goals. But what's important is just make sure you're reading the chart right and using the right indicators. Does that,
okay.
does that make
All
sense?
right, Jason. Absolutely. So my last question would be, what indicators would you suggest? I know the moving average is one of them.
Well, I use stochastics, MACD, Bollinger Bands, moving average. I think the key is knowing when to use them all. There's a time and a place. There's a time and a place for relative strength index. The key is just knowing when to use them and what's the flaw with them. But the number one thing I use is the chart and volume. Like everything else is secondary. Those indicators only get formed after the actual chart and price action do something. So I try to focus on the chart and price action primarily, and then I look at some of the secondary indicators to try to confirm what I believe I'm already seeing.
Oh, okay. All right, Jason. Thanks a lot.
Awesome, man. Thanks for calling in. Oh, we got one more waiting. All right, let's bring this last one in. Well, I say it's the last. We'll see. We order some food. We got to go pick up. All right. All right. Welcome to the call. You're live. You might have to turn your computer down though, because I can hear
Hello?
myself. Hello, you're live. You
Oh,
just
I'm
might have to turn
sorry.
your computer down because we can hear
Let me just
ourselves.
put you on mute. Let me put you on mute. I know you were ready for me.
Yeah, no
Yes,
worries. Take your time.
thank
Who
you.
do we have the pleasure of speaking with?
Hi, this is Alicia.
Alicia, welcome to the party. First female to call in.
Oh, really? Oh, I feel good about that.
That's what I'm talking about.
Trying to
Represent for
break
the
the
ladies.
monotony here.
Let them know some lady stock traders are out there.
We do trade. Yes, we're out here. We're here in full force. Yes, we are. So
So
I
what's
hear the
going on?
gentleman. The gentleman just before me asked you about the indicators that you use, and you did list them. Because that was one of my questions. My second question is, do you use an indicator called the accumulation distribution?
I personally don't use the accumulation distribution, but what that indicator, I'm a little rusty on that because I don't use it as much. But usually, accumulation distribution, it shows like how much of the stock is being bought up versus how much I believe is
Real
being
time,
sold.
right?
And you want to kind of see like, is more people buying or more people selling? I typically just use volume for that versus accumulation distribution. And here's the thing, there's no wrong indicator to use. There's just a wrong way to use them. To somebody,
Okay.
that's important indicator, but to the way that I trade and invest, it's not as important to me. I just like to use volume and see, is the average volume rising? Is it falling? And then if the volume is rising but the stock is going down, that tells me that there's more selling pressure. If the volume is rising, the stock is going higher, that tells me there's more buying pressure. So I like to use volume in a combination with the actual candlestick to tell me the story versus accumulation distribution, but I mean, it could serve its purpose. I believe you can apply that to the S&P 500, and you can say like it'll say like out of the 500 stocks, 300 are being sold off, 200 are being bought up. So you can kind of see if the market's more sell heavy compared to the 500 stocks. I believe you can use it like that. Don't quote me because I haven't used it. That doesn't tell me as much as I just like to look at the market and say, are we down or is the overall market bearish or positive? And I look at the total points on the overall market. But the accumulation distribution could say, yes, we're positive on the market, but 400 stocks are being sold off. It's just those 100 stocks are being bought at such a high price, it's offsetting the price that the 400 are being sold at. But the accumulation distribution is telling me 400 out of 5 are being sold off. So that might be good information. Whereas I'm just looking at, are we total net positive or down for the day? We can still be net positive for the day, yet majority of the stocks are selling off. So I mean, there's different ways to use the indicators and get like what does that information mean to you. It might mean that if I'm looking for bullish trades, I'm going to find less bullish trades than I'm going to find bearish trades because 400 are selling off and 100s are going up. So I might realize it's going to be harder for me to find bullish trades. So it just really depends on what you're trying to use it for and really understanding what it tracks so that you can use it properly versus just saying I heard it's something I'm supposed to use.
What I I wanted to ask you.
Don't get in no car accident now. Sound like you driving or something.
I wanted to ask you because I was listening to a gentleman the other day, and this is one of the indicators that he used to see real time as far as when when the big banks are coming in to trade, especially like on the lower time frames. And how we always say they're manipulating the market really, and how come you're seeing the stock move a certain way, but when you're looking at the volume and the accumulation distribution, it's not saying the same thing. But I didn't realize that the accumulation distribution and the volume were very, very similar, because I do use volume as well. But I was, I wanted more information on this accumulation distribution. I've been looking up and I can't find too much on it.
Yeah, maybe we'll do a video on it. I'll have Antonio take a note of that. Maybe we'll do a video
Yeah,
on
because
it.
I do learn a lot from your videos. You're very simple with your information and it's very clear. So I do refer to you a lot in your videos. Thank you.
Awesome. I'm glad that it helps.
Okay, so that was basically it. Thank you.
All right. Thanks for calling in.
All right, bye bye.
All right. Well, we've been going for about a solid hour. Should we take one more? We got to go get our pizza. All right. We'll take one more, then we'll shut it down after that. Um, unless you want to go get the pizza. No, we'll both go. We'll both go. We'll take this last one. What's up? You're live. You're hot on the Power Trades University live stream or the Brown Report live stream. I don't know. Who we have the pleasure to speak with?
My name is Denitra. How are you?
Oh, Denitra, I'm great. I'm glad we stayed and took another call because it's another female. I
Yeah.
love to see the ladies representing.
Thank you. Yes, I had a little meeting with my child's teacher. I was like, I hope he's still around when I get off, so I appreciate it.
Yeah, well, I'm here. So what's up? What's your question?
I guess I kind of wanted to wind back to where I left off, and another person who was watching kind of asked the same as far as beginners, because I'm still in the beginner stage. And I know you said there shouldn't be an excuse as far as like learning how to do this, but I guess for me personally, my issue is, and what I want to know is how to get through the overwhelming volume of information as far as where to start, because I have a lot of books, I see a lot of courses, and it's like, where do I like just settle myself and begin. Because now it's as if I'm in a stage of analysis paralysis because I get all this information, I watch all these videos, but then when it comes time for me to actually do it, I kind of hesitate because I have all this information overload. So I don't know how to, I guess, navigate through that so I can just zone in and just start getting handling business and doing this.
No, I totally get what you're saying. You can turn it up, Antonio, if you need to, man. Antonio's over there with his ear to his laptop. So here's the thing. So great question. You are the reason why we are actually, gosh, should I announce it? I guess I should. All right. You're the reason why we're testing something new right now. We are actually working on a brand new free version of Power Trade University, where we take all our teachings, all our trainings, and put them under one roof so you can go through kind of a structured learning. It's invite only
Yeah.
right now, so make sure you're on our email list, or shoot me a message after this. Maybe we can get you a special invite to get in there early.
Okay.
But you're one of the reasons why we're doing this, because we do understand that it's like, oh, we got videos on YouTube. Oh, we got stuff on our website. Oh, we got podcasts. Oh, we got stock market starter pack. We got the stock option starter pack. That's on our website to download. So they're all over the place, and you got all these different places to learn, even from us. And then you're like, okay, what do I do? Do I download the stock market starter pack first? Do I go to his YouTube channel? Do I listen to his podcast? Do
Right.
I go through his webinar? So we're actually putting together a new free version with like a structured learning path that's coming. So that's just kind of a sidebar. So what do you do to get through the overwhelming information? My opinion, after you kind of do the, shotgun approach where you're looking at everybody's video, this person's telling you Bitcoin, this person's telling you day trade, this person's telling you options, index funds, 401k, everything. It's like, then it's time to sit down and say, number one, what teacher do I resonate with? But then more important than the teacher, what style do I resonate with? Right? Because if there's almost like day trading, day trading, day trading, and you're like, I work a job, I got a kid, I don't have time to be in front of the computer. You might like that person, but like that style doesn't fit what you're trying to do. So find a person that you resonate with their personality, their teaching style, and then number two, you resonate with that style of investing, and then you cut out all the other noise. I think you go all in on that platform, that person, and really start to learn, because there is so many different things that you could be doing. And what happens is you start following so many people that you end up doing nothing, right? You get analysis
That's where I
paralysis.
am. Exactly.
Yep. Um,
Okay. I
one other
appreciate
thing,
that. Yeah.
I would tell you to do, um, like to give you something actionable, not just philosophical, right? One thing I would tell you to do to get started is I would use our link, and I would open a WeBull account using our link. I think it's what, thebrownreport.com/. Oh, Tony will put it in there. He's going to pop it up in the comment section. Go check out our free tools. I would open a WeBull account and I would open a Robinhood account. Here's why. Some people don't like Robinhood. Some people don't like WeBull. Forget all of that. It's not about liking them or not liking them. Number one, you will have taken the first step, which is opening a trading account. You need an account to trade. So open an account. Number two, it doesn't cost you any money to open an account. So there's no risk to opening an account. Okay. But once you have an account, by the way, if you use our link, and I think if you deposit $100, now it doesn't cost you $100, but if you deposit $100, you'll also get your first free stock. So, number one, you need an account. You have to open an account, so you get one. There's no risk to open an account; it doesn't cost you anything. But if you deposit $100, you'll also get your first free stock. That allows you to get into the game for free. You got a stock. Now you got something you can check stock quotes on. You can read news. So you're one step closer to becoming a trader versus sitting back and doing nothing. So that would be the first baby step that I would take. I would open a Webull account and a Robinhood account. Reason I would open both, they both give you a free stock. I would deposit $100, get the free stock from one, deposit $100, get the free stock from the other one. You got two free stocks. You can send your $100 back out to your account at that point, or just leave it there for your first investment. But at least you're well on your way. You got an account, free stock, you can check quotes, start reading charts, and now you're in the game and it didn't really cost you anything. Obviously, to get
Okay.
proficient at the game, you're going to probably want to take somebody's course or join somebody's program. And you said something very important I want everybody to understand is that's why I don't recommend books. Now, some people are like, what do you mean you don't recommend books? Now, don't mistake that for I'm against reading, okay? I literally got books on my shelf, all right? I'm not against reading. I'm saying I'm against a brand new person learning the stock market from a book because it's typically
Okay.
confusing. When I read my first stock market book, guess what happened? I needed another book to understand what they said in that book. They were like, you need to understand that all this fancy language. Then I had to get another book. Was like, well, what does that mean? And then I read that, and I had to get another book. Was like, well, what does that mean? And I was 3 books deep trying to understand what the first book was even talking about. And so I prefer courses, video teachings, PDF downloads, stuff where we're showing you actionably. Here's what this means. Here's what this looks like in the stock market. Here's what a candlestick is. Here's what a chart is. So that's why I like courses and video teachings versus books. That's the reason I don't have a book. People say, you should write a book. You should write a book. I'm not against books, but I found the best way to communicate and help people is like this through video and through showing my
Okay.
screen and showing what they're looking at. And that's what we have inside our university. We have a whole new video training platform that you'll be able to kind of check out for free, actually, to kind of get started.
Okay. I will do that. I appreciate you taking my call again, and I'll let you get to your lunch this afternoon. So, thank you so much for the advice and for the giving me a place to start.
Absolutely. So thanks for calling in. And then once you open your account, send us a message. Let me know.
I will. I will do that. I appreciate it.
All right. Have a good day.
You too.
Bye. All right, ladies and gentlemen, I know we got one call waiting in the queue. I'm sorry. We got pizza ready that's getting cold. We've been going for a good hour here. So leave us a comment below if we didn't get your question in. We'll probably try to do this maybe every Friday or something like that. Make sure you subscribe to the channel. Make sure you got the bell notifications turned on so you can get notified when we go live. If you like this video, help us supercharge the YouTube algorithm by giving it a thumbs up and tagging a friend that you believe should watch this and check it out. So thanks for hanging out with us, guys.